Hey everyone, and welcome to this deep dive. Today we're going to be looking at real estate investing and life insurance.
Two big
Yeah,
topics.
two big important things.
Yeah.
And we've got a ton of research from financial experts.
All sorts of perspectives.
Exactly. So this is really going to help you guys make those big financial decisions for your future with more confidence and, peace of mind.
Yeah, and what's interesting is that these two areas, real estate and life insurance, they might seem totally different,
Right at first.
but they're actually super connected. They both involve thinking long term, figuring out how much risk you're comfortable with, and ultimately building that safety net, that solid financial foundation.
That's such a good point.
Yeah.
Okay, so let's dive into real estate first. One thing that really jumped out at me from all this research is just how much the experts stressed getting your own finances in order before you even think about buying a property.
Yeah, it's like they all said the same thing.
Right.
Get your financial house in order first. You can't build anything on a shaky foundation, right?
Exactly. So before you jump into real estate, you need that stability. And the first thing they all talk about is having an emergency fund.
Emergency fund, always.
Yeah. But why is it so crucial for real estate investors specifically?
Well, think about it. Owning a property means unexpected expenses can pop up anytime. A leaky roof, a plumbing issue, a broken appliance.
Oh, yeah, definitely.
And without that emergency fund, those costs can totally derail your investment plan.
Ouch. That's a good point. It reminds me of when I had that pipe burst in my basement a few years ago. That emergency fund was a lifesaver.
Oh, I bet.
Seriously.
Yeah.
So, okay, what about high-interest debt? The experts seem to consider that like a big red flag for potential investors.
Yeah, high interest debt is like this weight dragging you down. It eats away at your returns and makes it harder to qualify for good mortgage rates.
Right, it's like trying to run a race with a backpack full of rocks.
Exactly. Get rid of that debt first and you'll be much better off.
Lighten the load.
Yeah.
So, okay, we've talked about financial prep, but what about risk tolerance? Real estate is not exactly a walk in the park, right?
No, it's definitely not a get-rich-quick scheme. It's a long game and there's uncertainty. The market can fluctuate, repairs can be expensive, finding good tenants can be a challenge.
So true. You need to be honest with yourself about how much risk you're comfortable with.
Yeah, can you handle the stress of a fluctuating market, or do you prefer something more stable and predictable?
It's all about knowing yourself. All right,
Uh,
so we've covered financial prep and risk, but now let's get to the heart of real estate location.
the golden rule.
But why is location so crucial?
Location determines a property's value. Think about it. A good neighborhood is important, sure, but you also need to look at things like job growth in the area. More jobs mean more people wanting to live there, which drives up demand and property values.
Right, and I imagine development plans play a big role too. Like, is there a new park or a shopping center going up nearby?
Exactly. Those things make a neighborhood more appealing to buyers and renters. So imagine you're a buyer. Would you pay more for a house in a vibrant, up-and-coming area or one in a stagnant neighborhood?
Yeah, the answer is pretty obvious. And this applies to rentals too. A good location makes it easier to attract tenants and charge higher rents.
Absolutely. Okay, so location checked. You found the perfect spot. Now it's financing time. And the experts had a lot to say about mortgage rates.
Oh yeah, mortgage rates.
Shopping around for the best rate is non-negotiable. Even a tiny difference in interest can save you a fortune over the life of your loan. We're talking potentially tens of thousands of dollars.
Wow, I never realized how much those tiny percentage points could add up. And speaking of important numbers, what about your credit score? How much does that affect your mortgage rate?
Your credit score is like your financial report card. It tells lenders how responsible you are with money. The higher your score, the better the terms they'll offer, including lower interest rates.
So good credit equals lower interest and potentially thousands of dollars saved. Got it. But what about those hidden costs of a mortgage? Beyond the monthly payment, I'm talking about property taxes, insurance, maintenance.
Ah, yes, those sneaky costs. They can really catch you off guard. It's important to factor all those expenses into your budget from day one.
You're telling me a cracked foundation or a leaky roof can really put a dent in your returns.
Absolutely. And here's another term that came up a lot, over-leveraging.
Over-leveraging. That sounds a little scary.
It means taking on more debt than you can comfortably handle. Just because a bank is willing to lend you a certain amount doesn't mean you should take it.
Right. Don't get greedy.
Exactly. You need to find that sweet spot where you're investing enough to see good returns, but not so much that you're constantly stressed about making payments.
Okay, so don't get in over your head. Makes
Oh,
sense.
nice.
So we've covered some crucial ground in real estate, But now let's switch gears and talk about life insurance.
And this is where we see a big disconnect between what people think they know and how things actually work.
Because let's be honest, when most people think about life insurance, they picture older folks.
Right? Yeah. They think it's something you worry about later in life.
But the experts say that's a big misconception.
A huge misconception.
Why is that?
Well, the younger and healthier you are, the lower your risk. And that translates into lower premiums. It's all about locking in those favorable rates early on, because as you get older, statistically, the chances of needing that coverage go up and so do the costs.
That's a great point. It's like getting a good deal on something when it's on sale, right?
Exactly.
But even if you're young and single now, life can change in an instant. Suddenly you're married, you have kids, maybe you're even caring for aging parents. And those changes often come with financial responsibilities.
Absolutely. Life throws curveballs, and life insurance is all about having that safety net in place.
Okay, so let's say you realize, okay, I need life insurance. How do you actually figure out how much coverage to get? It can't just be a random number, right?
Definitely not. Determining coverage is a personalized process. First, think about your debts. Things like your mortgage, student loans, car loans. Your coverage should be enough to pay those off, ensuring your loved ones aren't burdened with those debts if something were to happen.
That's a huge relief for your loved ones.
Yeah.
But I imagine it goes beyond just covering those big debts, right?
Oh, absolutely. You also need to consider future expenses. Will you have kids going to college? Are you caring for aging parents? Those costs need to be factored into.
Okay, so debts, future costs. What else should people consider when figuring out the right coverage amount?
Think about your family's lifestyle. How much would they need to maintain their current standard of living if your income were suddenly gone? Life insurance can help fill that gap.
So it's not just about specific debts. It's about replacing income and maintaining a certain quality of life. Got it. Now, I've heard this rule of thumb about having 10 to 12 times your income in life insurance coverage. Is that a good starting point?
It can be a helpful guideline, but it's not a one-size-fits-all solution. Everyone's situation is different.
Right. Your individual needs and goals will determine the right amount of coverage for you. Okay, so we've talked about the why and the how much of life insurance. But now let's dive into the types available. I know there's term life insurance and whole life insurance.
The two main types?
But what exactly are they, and what are the key differences?
Let's start with term life. It's like renting coverage. You pay a premium for a specific period, maybe 10, 20, or 30 years. And if you pass away during that term, your beneficiaries receive the death benefit. It's straightforward, relatively affordable, and often a good choice for younger people who are primarily looking to cover debts and provide for their families during a specific time frame.
So term life insurance is like a safety net for a specific period of your life. That makes sense. What about whole life insurance? What sets it apart?
Whole life is more like owning coverage. It's permanent and lasts your entire lifetime. The premiums are typically higher because it includes a savings component, sometimes called cash value. This cash value can grow over time and can be accessed through loans or withdrawals.
Interesting. So whole life insurance combines coverage with a potential savings or investment element.
Exactly. But here's the thing. The investment aspect of whole life insurance can be complex. It's essential to understand how the cash value grows, what fees are involved, and how it all impacts the overall cost of the policy. So it's not just a simple insurance policy, it's a financial product with its own set of intricacies. Got it. Now, this is where the decision gets tough. Term versus whole life. Any advice on how to choose?
Well, if you're mainly looking for affordable protection to cover debts and provide for your family during a specific period term, life insurance is often the simpler option. It's like a safety net for specific financial obligations.
Okay, term for debt coverage. What about whole life? When would that be the better choice?
Whole life might be a better fit if you want lifelong coverage, are interested in building that cash value component that could be used for future needs, or are looking to create a legacy for your heirs. But remember, it comes with higher premiums, and you need to carefully consider the investment aspect.
So term for specific coverage, whole life for more comprehensive long-term needs. That's a helpful way to think about it. Are there any other key questions people should ask themselves when making this decision?
One of the most important things is understanding your risk tolerance. How comfortable are you with the idea of your insurance policy also being an investment? Are you looking for guaranteed returns, or are you okay with the possibility of market fluctuations?
Right. It's not just about picking a policy. It's about aligning it with your overall financial strategy and comfort level. And this brings us back to a point the experts emphasized again and again, the importance of getting professional advice.
You don't have to navigate these decisions alone. A financial advisor can be incredibly helpful. They can assess your needs, analyze your options, and create a personalized plan that aligns with your goals.
So whether you're just starting to explore real estate or you're trying to figure out the world of life insurance, expert advice can be invaluable.
Absolutely.
Yeah.
Now let's take a closer look at some real estate trends that are shaping the market today. One thing that stood out to me is the growing popularity of rental properties.
Yeah, it seems like everyone's talking about becoming a landlord these days. Why is that?
There are a few factors driving this trend. First, the rise of remote work has made location less important for a lot of people. They can invest in properties with strong rental markets, even if they don't live there themselves.
So they can work from anywhere and collect rent checks from a different city. Pretty smart.
Exactly. And we're also seeing a shift in generational preferences. Younger generations are delaying homeownership, which is leading to increased demand for rentals.
So for those considering jumping into the rental property game, what are some key things to keep in mind?
Location, location, location. Just like with any real estate investment, location is crucial. But with rentals, it's especially important to analyze the local rental market. What are the average rents in the area? Is there high demand for rentals?
Right, you don't want to end up with a vacant property.
Exactly. And another important factor is property management. Do you have the time and expertise to manage the property yourself? Or would you need to hire a property manager?
Good point. Managing a rental property can be a lot of work. Finding tenants, handling maintenance, dealing with repairs, it's not passive income.
Definitely not. You need to be prepared for the ongoing responsibilities.
So real estate investing, especially in rentals, requires careful planning and a realistic assessment of your time commitment. Now let's circle back to life insurance for a moment.
Yeah.
We talked about term and whole life, but are there other types of life insurance out there?
There are a couple of others you might hear about: universal life insurance and variable life insurance. These are more complex types of permanent life insurance that offer greater flexibility when it comes to premiums and investment options.
Okay, so more flexibility, but probably more complexity too, right?
Exactly. These policies can be quite intricate and require a deeper understanding. It's crucial to seek professional advice before diving into those.
All right, so if you're venturing into the world of universal or variable life insurance, talk to an expert first.
Absolutely. Now let's shift gears and talk about a crucial aspect of both real estate and life insurance beneficiary designations.
Right. You need to decide who inherits your assets or receives the death benefit from your life insurance policy.
Choosing beneficiaries might seem straightforward, but there are some important things to keep in mind. You want to make sure your designations are clear, up to date, and reflect your wishes.
So it's not a one-time decision. You need to review your beneficiaries periodically, especially after major life changes.
Exactly. Marriage, divorce, the birth of a child, even a significant change in your financial situation. These are all events that might require updating your beneficiary designations.
Makes sense. You want to make sure your assets are distributed according to your plan. Any other tips on beneficiary designations?
It's a good idea to name contingent beneficiaries. These are backup beneficiaries who would inherit your assets if your primary beneficiary is unable to receive them. For example, if they predecease you.
Oh, that's smart. It's like having a plan B.
Exactly. Now, before I move on, I want to take a step back and talk about something that's crucial for both real estate investing and choosing the right life insurance: understanding your risk tolerance.
Right, because one size definitely doesn't fit all. What are some good questions people can ask themselves to figure out their risk tolerance?
One helpful way to think about it is to imagine different investment scenarios. Would you be comfortable losing a significant portion of your investment in exchange for the potential for higher returns? Or would you prefer a more stable, predictable investment, even if it means lower potential growth?
That's a great question. Because some people are okay with higher levels of risk, while others prefer to play it safe. And knowing yourself is crucial for making smart financial decisions.
Absolutely. And your risk tolerance can change over time too, so it's good to reevaluate it periodically, especially after major life events.
All right, so understanding your risk tolerance is a key piece of the puzzle when it comes to both real estate and life insurance.
Exactly. And speaking of puzzles, navigating the world of personal finance can sometimes feel like just that, a puzzle.
It definitely can be overwhelming.
But don't worry, there are so many great resources available: reputable financial websites, podcasts, books, and of course, talking to a financial advisor can be incredibly helpful.
So whether you're a seasoned investor or just starting out, remember that knowledge is power. There's always more to learn.
Absolutely. And don't be afraid to ask questions. The more you understand, the better equipped you'll be to make those informed decisions.
So true. It's all about taking control of your financial future one step at a time. And remember, financial well-being is a journey, not a destination.
Beautifully said. It's about making smart choices today that set you up for a more secure and fulfilling tomorrow.
I love that. It's empowering to know that we have the power to shape our financial futures. Now, before we wrap up this part of our deep dive, I want to leave you with a thought-provoking question. How do your personal values and aspirations influence your financial decisions?
That's a great question. Financial decisions aren't just about numbers. They're often intertwined with our values, our dreams, and what we want our legacy to be.
Exactly. So as you move forward with your financial planning, take some time to reflect on what truly matters to you. What kind of life do you want to build? What impact do you want to have on the world?
By aligning your financial choices with your values and aspirations, you'll not only create a more secure future, but also a more meaningful and fulfilling life.
Beautifully said. And with that, we'll wrap up part 1 of our deep dive. But don't go anywhere. We'll be back in a moment to explore even more fascinating insights into the world of real estate and life insurance.
Welcome back to our deep dive into real estate and life insurance.
We've covered so much already. But, before we jump back into those topics, I wanted to touch on something that came up a lot in the research, something that's super important for anyone looking to build a solid financial foundation: budgeting.
Ah, yes, budgeting.
The B word.
I know, right? But seriously, creating a budget doesn't have to be scary or restrictive.
It's actually a really powerful tool.
It is. It can help you gain control of your finances, reach your goals, and avoid those stressful money moments.
Exactly. And, a lot of people avoid budgeting because they think it means depriving themselves.
Right, like they can't enjoy life or treat themselves if they have a budget.
But it's actually the opposite. Having a budget gives you peace of mind, and it allows you to spend money on the things that are important to you without feeling guilty. Totally agree. It's about making conscious choices about where your money goes.
Exactly. Aligning your spending with your values and priorities. And, the first step is understanding where your money's currently going.
Oh yeah, track your expenses.
Track everything for a month or two. Really get a clear picture of your spending habits. You might be surprised by what you find.
I know I was. When I actually started tracking my spending, I realized I was wasting so much money on things like takeout coffee and subscriptions I wasn't even using.
It happens. Once you know where your money's going, you can start setting realistic goals.
Goals are so important.
Do you want to save for a down payment? Pay off debt? Invest for retirement? Having clear goals will help you stay motivated and focused.
Absolutely.
Yeah.
Because it's so much easier to stick to a budget when you know what you're working towards.
Exactly. And don't be afraid to adjust your budget as needed. Life changes, so your budget should be flexible too.
So budgeting, it's not about deprivation. It's about empowerment. It's about taking control of your finances and making your money work for you. Okay, now let's get back to real estate investing.
Right.
One thing that caught my eye in the research was this concept of house hacking.
House hacking.
Yeah, have you heard of that?
Oh, yeah. House hacking is a great strategy, especially for first-time investors.
Oh, is it?
It's basically finding creative ways to live in a property while generating income from it. So you're offsetting your housing expenses.
So you're like living in your investment property.
Exactly. One common approach is to buy a multifamily property, live in one unit, and rent out the others. The rent you collect can help cover your mortgage and other expenses, sometimes even generating positive cash flow.
Wow, that's amazing. You're essentially living for free or even making money while building equity in your property.
It's a fantastic way to get started in real estate without a huge down payment or a ton of debt.
I can see why it's becoming so popular. But I imagine it takes a certain type of personality. Someone who's comfortable sharing their space with tenants.
Yeah, definitely. And location is still key. You want a property in a desirable area with strong rental demand.
Of course. And you need to screen your tenants carefully.
Oh, absolutely. You're essentially living with these people, so
Yeah.
you want to make sure they're responsible and respectful.
So house hacking, a clever strategy for those looking to get into real estate while keeping their housing costs low. Okay, let's switch gears and talk about something that's often overlooked when it comes to life insurance riders. What are life insurance riders?
Think of riders as add-ons to your basic life insurance policy. They're optional features that you can purchase to customize your coverage and get additional benefits.
So it's like adding toppings to your ice cream sundae.
Exactly. And there are tons of different riders available.
What are some common ones that people might want to consider?
One popular one is the accelerated death benefit rider. This lets you access part of your death benefit while you're still alive if you're diagnosed with a terminal illness.
Oh, wow, that could be so helpful for covering medical expenses or just making the most of your remaining time.
Exactly. Another common rider is the waiver of premium rider. This waives your premium payments if you become disabled and can't work.
That's a huge relief during a tough time.
Yeah.
Are there any riders specifically for families with children?
Yeah, there's the child term rider, which provides additional coverage for your kids, and the child rider waiver of premium waives the premiums for that coverage if the policyholder, pass away.
So it's like an extra layer of protection for your kids' futures. These riders sound so valuable. Any tips on how to choose the right ones?
The best riders for you will depend on your needs and circumstances. Talk to your financial advisor about
Customizable add-ons that can enhance your life insurance coverage and provide valuable benefits. Definitely something to discuss with your financial advisor.
Okay.
Let's shift gears again and talk about investing.
Investing, yeah.
It can seem intimidating, especially for beginners. Where do you even start?
Well, first, you need to understand your investment goals and risk tolerance. Are you saving for retirement? A down payment on a house? Your strategy will depend on your time frame and how much risk you're comfortable with.
Right, because investing for retirement is different from investing for a short-term goal.
Exactly. And once you have a handle on your goals and risk tolerance, you can start exploring different investment options.
There's so many options out there.
Stocks, bonds, real estate, mutual funds, ETFs, the list goes on.
It's a lot to take in.
Right.
Any advice for navigating this complex world?
One key principle is diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes to reduce your overall risk.
That makes sense. So if one investment isn't doing well, others can help balance it out.
Exactly. And another important thing is fees. Fees can really eat into your returns over time.
So compare fees, diversify your portfolio, and make sure your investments align with your goals and risk tolerance.
Got it.
Now, I'm curious about your thoughts on alternative investments, things like cryptocurrency, precious metals, collectibles. What's your take on those?
Alternative investments can be interesting, but they often come with higher risks and require more specialized knowledge.
So not for beginners.
Not necessarily, but you need to do your research, understand the risks, and make sure they align with your goals and risk tolerance.
So proceed with caution and talk to an expert.
Exactly. Now let's get back to real estate and talk about property taxes.
Property taxes. Yeah, they can be a significant expense for homeowners.
And they can vary a lot depending on where you live.
So what are some key things to keep in mind about property taxes?
First, understand how they're calculated in your area. They're usually based on the assessed value of your property, which might be different from its market value.
So even if my home's value stays the same, my property taxes could go up.
If the assessment changes, yes. And be aware of any exemptions or deductions you might qualify for. Some areas offer tax breaks for seniors, veterans, or homeowners with disabilities.
Well, that's good to know. Any other tips?
Don't be afraid to appeal your assessment if you think it's too high. You can often challenge it by providing evidence of comparable properties with lower assessments.
So do your research know about exemptions and appeal if necessary?
Yeah.
Got it. Now let's talk about estate planning.
Estate planning is all about making sure your assets are distributed according to your wishes after you're gone. It's not just for the wealthy. Everyone should have an estate plan.
Right. Estate planning is about peace of mind, knowing that your loved ones will be taken care of.
Exactly. And there are several key parts to an estate plan. A will outlines how you want your assets distributed.
So if you don't have a will, your assets might not go where you want.
That's right. Without a will, the state decides which may not be what you intended. And another important thing is a durable power of attorney for finances. This designates someone to manage your finances if you become incapacitated.
So it's like a backup plan in case you can't make decisions yourself.
Exactly. And a healthcare proxy does the same thing for healthcare decisions.
These are all so important. Any advice on how to get started with estate planning?
Talk to an estate planning attorney. They can help you create a plan that meets your needs and makes sure your wishes are followed.
Don't delay. Get your estate plan in order. Okay, we've covered a lot in this part. Budgeting, house hacking, life insurance, riders, estate planning. It's been a lot.
A whirlwind of information.
But hopefully our listeners are feeling more informed and empowered.
That's the goal.
But don't go anywhere. We'll be right back to wrap up this deep dive with some final thoughts and key takeaways. And we are back for the final part of our deep dive into real estate and life insurance.
We've covered a ton of ground.
We have from those mortgage rates to budgeting to estate planning. Phew.
It's been a lot. But one thing that really stood out to me from all this research was just how much the experts emphasize the human side of finance.
The human side.
Yeah, the emotions, the psychology behind our decisions.
Oh, absolutely. Because let's face it, financial decisions aren't just about spreadsheets and numbers. They're deeply personal. They're about our hopes, our fears, our dreams.
Exactly. Buying a house. It's not just about square footage and property taxes. It's about creating a home, a place for you and your loved ones to thrive.
And choosing life insurance. It's not just about calculating coverage. It's about peace of mind, knowing your family is protected.
So yeah, when you're making these big decisions, don't just focus on the technical stuff.
Right.
Take a moment to think about how you feel about it.
Think about what truly matters to you. What kind of life do you want? What kind of legacy do you want to leave behind?
It's about finding that balance between financial security and living a life that's fulfilling.
That's a great way to put it. So as we wrap up this deep dive, I want to say that I hope you found this exploration of real estate and life insurance informative and maybe even a little inspiring.
Definitely empowering.
Empowering too.
Yeah.
Knowledge is power. The more you know, the better decisions you can make.
And remember, you don't have to figure this all out on your own. There are experts out there who can help guide you.
So keep learning, keep exploring, and keep striving towards those financial goals.
Absolutely. Thanks for joining us on this deep dive into real estate and life insurance.
We'll see you next time for another fascinating exploration of personal finance.